Hey, welcome back. This is Colin Keeley here,
And I'm Brent Sanders.
and we are the co-founders of Avocado, an audio publishing platform. It's a bit of news this week. Brent actually sent this to me. So one of our, I wouldn't want to call him competitor, but kind of a competitor in the audio course space is called Knowable, and they are basically like masterclass for audio courses. And so they partner with kind of celebrities of sorts or experts and produce courses and bundle them all together and sell them as a subscription. So they raised 4 million bucks on October 1st, 2019. So a little bit before we had this idea. So call them like 6 to 8 months ahead of us. And Warren had this excellent tweet storm this week, and all the credit in the world to him because he made all his numbers public. And they are not very good. They've had 27,000 signups, $125,000 in revenue, 233 teachers signed up, a $11,000 hours of listening, and about 3,100 paid subscribers. And so they've burned through three of that $4 million and have about $1 million left, and had to fire half their team. And basically things are not going very well over there. He says his key mistakes were hiring based on expected growth, broadening customer type too early, spending too much time talking with investors versus customers, not building customer acquisition into the DNA of the product. And also, this is probably the more concerning point to us, is that COVID hasn't helped audio and less commuting time. So
Right.
I think it'd be interesting for us to just talk about reacting to this and kind of what it means potentially for us as well. So what was your kind of initial take on this when you saw it?
It's interesting. I mean, I felt validated because we're not seeing like explosive growth, but obviously we're a different animal. Like we're in the audio space, but I think we are going into this. We looked at audio as a growing space, and I do think that it's not seeing the growth. You can say commuting is a big piece of it, but it's just like largely like people are home. I feel like it's just different. People aren't going to the gym. This is where I would consume a lot of my audio content, is either working out or on a treadmill or something like that, just kind of 45 minutes of just kind of zoning out and getting into some sort of topic. But yeah, I mean, that was my immediate reaction. I don't know if that's a good reaction, but it was definitely like, oh, okay, so they're not seeing like fireworks either. And we're at a different stage. We're a different animal. We didn't raise any money. We obviously are still in the MVP stage. I mean, realistically, like as in comparison to where they are and where they've been so far, by any metric, we're in the very initial stages of it. But I think we are seeing a similar reaction from the end user, right? It's like there are a lot of people interested in getting involved. There are a lot of people interested in putting their content, a lot of believers, but when it comes down to sales metrics, it's pretty similar in terms of, we didn't forecast out, but it feels similar in terms of what the reaction has been to, end user sales. So it made me feel a little bit better, to be honest. It made me feel like we weren't alone, and it made me feel like, hey, if these guys raise 4 million bucks, then I shouldn't feel so bad about people not buying our audio courses or signing up for, our various products. So yeah. How about you?
Yeah. So maybe to put it in perspective for listeners, a really cash efficient startup would raise like $1 million to hit $1 million in revenue. And then, assuming it's SaaS, you apply a 10x multiple to that. So it's a $10 million business. And then those investors would be really happy with that kind of return. So burning $3 million and hitting $100,000 in revenue for a really not that tech heavy business is really extraordinarily not cash efficient. It is a pretty bad sign. And so I look into like what he says, those are his mistakes. I think a lot of that is accurate. Then I look at, it's basically, you fall into two buckets: market and execution. And I think you could clearly tell from that thread, he's not an idiot. Like they're not executing exceptionally poorly. So then you're looking more at the market. So I guess on the execution front first, it's like somewhat of a hits driven business. And if you're often signing up for Netflix or HBO for a specific movie or show, and they never to me, had any hit that was worthwhile for signing up. So they weren't great on content for a content business. I didn't think they were great at marketing. Like they weren't partnering with any kind of influencer that would get them a ton of distribution. And then on the market front, I do think he's onto something with COVID and audio, like that. A lot of this was kind of predicated on the thought that you do it consuming while you're traveling to work or while you're busy doing other stuff. And when you're at home, those use cases just don't exist as much. And
Right.
I think him and us are right. And like, this is the future, audio and education. It's pretty clear to me that the timing is not right. And I think this is probably, looking at myself, one of my bigger flaws is I'm directionally accurate on all these like future predictions, and the timing is maybe overly optimistic, and it is further out than I always anticipate. And so like, I think it's important for us, and me in particular, to look at this like dispassionately. Like I really deeply believe in this idea, but is the timing correct? And I think that is probably my biggest takeaway of this is I don't think he's dumb. I don't think he's executing exceptionally poorly. And I think the market is the problem.
Yeah, maybe. I mean, let's think of one differentiator. When Knowable first was in its infancy, we were just building Avocado, and they had a smaller course catalog. It was very thought out, produced specific content. And, and looking at the app now, it's exploded. It's almost, and have they rolled out their marketplace? Because I feel like that's more indicative of the content that I'm seeing in the product now, which is where we went first, which was, hey, we're going to reach out to as many creators as we can and get them all into the product. And then came the like question of like, well, we have a bunch of content that's not great for audio, but we have content, we were able to sign up a couple hundred creators pretty quickly, get their audio courses online. And so our numbers, I guess, look good there, but the quality was lacking. And that was kind of one of our conclusions was, okay, we need to be a little more thoughtful about this, or at least get audio first content. And they had that from the start. It felt like this like NPR quality produced content that was like, okay, this makes sense. And I would expect it to at least prove out the model for, does that level of content make sense? So, the one argument that kind of creep back up that I've had other people say to me, it's like, well, podcasts are free, radio's free. And I think he mentions it is like, there's always this idea that radio and audio are just going to be, a thought of free platform, which doesn't really make sense if you look at Audible. I mean, that's a huge marketplace of audio content. So I guess the one question was like, did it make sense to do like these fully produced audio courses to get started? And to your point, it's sort of like a masterclass. It's like, why didn't they, or maybe there wasn't the right fit for some sort of like, I don't want to use the word influencer, but sort of like a superstar to come in and, promote their audio course. It didn't seem like they were able to attract, or maybe they didn't think it was worthwhile, but they didn't seem to attract that like one or two people. Although they did have a startup course with Alexis Ohanian, right? I remember that was like one, and I think he was an investor, right?
He was their first investor, and I think they reached out to them like just as they had the idea, and he was basically replied instantly, is like, yeah, I'm in, happy to record with you. And so I actually think there's some parallels to this and Quibi, where they kind of maybe showcase the format too much and they didn't showcase the content enough. I think that's what people care about, is they care about the content. They want to hear from whatever big influencer talking about something. They don't really care that it's audio as like the medium to teach. It's just like they want that content. And I don't think they ever nailed that.
I think we could probably learn from that. I think I've gotten that feedback. I mean, an investor that we've spoken to is kind of consistently beating that drum of like, but why audio? Like, why does it have to be audio? Like, it feels like you're pushing this unnecessarily. So I guess that validates one thing that I think I've been suppressing a little bit about the feedback. It's like, yeah, but it's the thing, it's Avocado Audio. It's the thing that we're doing. And, we both believe heavily in audio and really enjoy it and see the value, but like, does it strictly need to be that way? And I guess this may validate the answer is probably no to that extent.
Yeah, there is, to me, always, there's going to be some luxury audio market of sorts. And it's not clear how you approach it. I think Warren, who's the founder of Knowable, kind of cleverly ended up on the same solution we did, where it's like education is the most clear return on investment. So that is where people will be most likely willing to pay.
Mm-hmm.
And he says he kind of de-risked it, which I don't know. So they have $100,000 in revenue. Like if they have so much money, you could just blow that on performance marketing. And I think you could ramp up to that, whether it's a great product or not. You just get some percent of people converting. Like even Quibi had, I think 10% of people are converting from free trial to paid. And just some percent of people are going to forget to cancel. So I don't know if he's really de-risked that.
Right. I mean, did they really give a sense? And I don't remember seeing like, here's where we're going now. It was more so like we got just under $1 million in the bank, let go half the team, but like, what's next? Like, I guess that's TBD. We'll hear about that in the next tweet storm a couple quarters from now.
I think he covers this a little bit. Basically, they let go of half the team. They're going to laser focus on one customer, which I think is busy professionals, which is similar to where we ended up. I think those people are the most time strapped and have money to actually pay for, actually learning. But I don't know. He said they got some interest on like enterprise learning, so they may go that direction. This is where, I mean, it's great. They raise a bunch of money. They're paying themselves a salary. They're doing fine with that. But we have a bit of advantage where we are not as tied to it. And we don't have these massive expectations of growth. So we could kind of step back and think, is this the direction we want to keep going, or should we go a different direction?
Yeah. I mean, let's talk about that for a second, because I think it's an interesting differentiator. It's like $4 million, or to be specific, I think it was $3.75 million. So let's just say, $3.5 million to work with, assuming legal fees and stuff. And that's a cheap attorney, but you've got $3.5 million to work with. So they've, I know they invested heavily in, how do we get this production? I'm sure, when I say heavily, I don't mean that's like a lion's share of it, but you are not necessarily beholden to the investors to deliver it right away. I mean, it's possible they could turn this thing around, but it's going to be a long, long slog to get there. And so, and looking at our position, I guess we've had to, I can't say that we've had to work harder, but we probably have had to do more with less. Obviously, there's no cash, right? We have our time, and there's only two of us, so we weren't able to get, what did he have? He let go of half of his team, so I would assume there's like 20, 30 people on that team.
Yeah, I think they knocked it down to 6 plus a lot of contractors.
Sure. Yeah, it's just, I think exactly what he said. It's like you maybe build the wrong things. You go in directions that people aren't really interested in. That being said, I mean, it's kind of apples and oranges, right? It's like we're a bootstrap early stage company. He's a venture backed early stage company that started before we did. Their traction reflects, if you look by the numbers, I mean, their revenue is, we would love that kind of revenue. If we, bootstrapped and had $100,000 of revenue, I think we'd be really happy, and we'd be going directionally the opposite way. I mean, that's almost an interesting way to think about it. It's like, had they been a bootstrap business, that tweet storm wouldn't exist. Then again, he wouldn't have hired all those people. And, how do you distill back? It's like, would he been able to get that revenue without, having $100,000 or $1 million of performance marketing? Like, do you spend $1 million to get 100,000 in this space? It's like, we really haven't, I don't feel like we've seen enough traction, or we haven't dabbled with paid enough to understand, like, what does it cost to acquire the customer and understand the long-term value, just because it's like, it's not really in our, best interest to even do that right now.
Well, for perspective on this, I don't have exact numbers, but on Gumroad, at least there's probably 200 plus creators that have made over this amount in the last year. And their cost of acquisition is probably close to zero. It's probably their own audience. And cost of production is also pretty close to zero. Like, they've just done it independently. And I would say there's even more than that on Teachable. So there's probably 500 plus small businesses out there in a similar space doing this for no money. And they did it with $3 million.
That's interesting. I mean, what the interesting part of it is, I also remember the Gumroad tweet storm about how the founder was about to shut it down, right? Or essentially told this story about how I think he had raised some money and then it didn't go the direction, but now, by persevering through it, I would imagine it's turned around because it's such a popular tool now.
Oh yeah, you're talking about Sahil and his like my
Yeah.
failure to build a $1 billion business, which it is almost in all likelihood gonna be a $1 billion business now. It's just gonna take 10 years more than he anticipated. I think he talked about it where his run rate is, and he's probably like a $200 million business right now.
Wow. Yeah. I mean, so I guess that's an interesting aspect that I would kind of pause in both our situation and Knowable situation is like, does it just take more time? Does it just take either the market to catch up with the idea, or it's just a business that's going to take 10 years of time to be successful? Or is it a matter of confronting that truth early on and being like, okay, this wasn't a walk-off home run, it's going to be a hard grind, we're going to go into extra innings and we don't know if we're even going to win the game. I mean, that's just kind of entrepreneurship to a large extent. But I do think the interesting difference between us and them is the fundraising. I would imagine that Warren would, I don't know, we should probably have him see if he'll come on our little conversation, but it would be interesting to see if he would have waited to raise money to see, could he have bootstrapped as far as, let's say we have, and then, get to this inflection point where then they're going to go into the, the market that they're intending to dive into and then raise the money. Or, because I think we've bellyached about, oh, you see, this company's raising, they don't even have a product. This company's raising and they're actually raising to build the product. And like, could we have done that? Maybe. I mean, I think I'd rather be in a position where we know something works. We're starting to see enough traction where it does make sense to dive in. Because I think the real cost here is our time, right? Mm-hmm. I mean, it's like, do we want to spend the next 6-8 years on this and driving it to a close for our investors? Or do we want to be able to quickly move and not have to kind of get everyone's consensus that we are moving into something else? And the hard truth of like burning that kind of cash. I don't know. I do think something needs to be said. I mean, venture capital is different from a lot of other sort of investment ethoses where it's like, hey, this money may not be returned. And in all likelihood, most of the time it's not, but sometimes it is and everyone, most of the investors are understanding that and, going about it in that way, but it still doesn't make burning that kind of cash any easier.
Yeah, I look at it. So we come from the venture capital world. We definitely could have raised that pre-seed round at extreme dilution, like to get the thing off the ground. And if we did that, we would be pretty committed to this path. And I'd say our like expected value or like outcome overall is probably lower because you're like go, big or bust.
Right.
Now, any outcome is positive for us. And I think the most likely outcome for Warren and Knowable is they continue down this path for like 2 more years, struggle to raise and probably shut it down. I mean, maybe it's like a come from the ashes story, but those are pretty rare in venture.
Yeah. I remember, I worked on a trading floor, like on the technical side, my first job out of college, and they were teaching us how to trade, right? Trade options, which again, reminds me of your, you notionally know where things are going to go. You know where the market's going to go, but you have to time it as well. You have to pick the date in which it's going to happen and then work backwards from there. But it was like something along the lines of, and they gave us a little bit of money to trade with. So I could understand how the markets worked. And so, placed a bet on something. I love it. Made an bet, bought certain calls or puts. And then like 5 minutes after the open, it's down 20%. And I'm looking at, sort of my coach on this and saying, okay, well, do I put in more? And he goes, Brent, if you put money on a horse and then they roll out of the gate and break their leg, are you going to go back and try to put double down on it? Like just have the discipline. But it does seem like that. But these cases do happen. So I go back to Gumroad. That's a great example of like, just persevering, pushing through, finding better market fit. And I think that's, it's a lesson for us. It's a lesson for Warren. And I hope he sticks with it. I hope they, make something of it, because it's going to take a lot of grit and perseverance. And these are all the things that you hear about, these buzzwords that, people study, and they're totally overused, but they are, I think the intention is for this phase of either investment or a business or whatever is to just keep alive, stay alive as long as you can. Because I've worked with a lot of companies as a contractor or an advisor or whatever capacity where things change, like as we've seen with COVID, like the market shifts and you're plugging away on this business that's not that pretty you thought it would be, and you're 3-4 years into it, and then all of a sudden something changes. You are really attractive to an acquirer. Things just are in constant motion. So I do think that idea of like staying in the game as long as possible does make sense, but at what cost? That's when it comes down to the people that are involved in it and understanding, hey, this is what I'm going to spend my life's work on, and it's either going to be years for nothing, and it just is what it is, or it's going to have a huge outcome.
I've had a few different really smart investors and founders tell me you just have to stay alive long enough for something good to happen. And you don't know like what is going to happen, but often your hunch is right. Your timing is just wrong. So you just have to, be a cockroach is the term in the startup world.
Yes. I love those businesses. And I mean, I don't strive to be one necessarily, but I'm okay with that. And I think that the real interesting conversation around this, and this is, I'd much rather talk directly to Warren about it than imagine how he's going through, but like the mental toll. And I think that's the game that financially I think it is a big deal, but like as you said, these guys are probably making a salary. He's probably still continuing to have some sort of salary coming in beyond the basic financials of just being able to pay your rent, pay your mortgage, like keep food on the table. I think the real challenge becomes a mental game. And I do think it's like people embody their livelihoods and their careers and become that identity of I'm a successful tech entrepreneur. I just raised $4 million, like to then come out and publicly tweet this, take some serious, like that to me shows a lot of grit and perseverance. And I think he'll be successful just based on his ability to confront hard truths. Like it, apparently maybe it's painful for him to do it, but I don't think he would have tweeted this many of the like nitty gritty details. And I think he mentioned, he's like, I'm scared to press tweet on all this stuff, but like that shows to me the G word, grit, perseverance, like fortitude. It shows that if I was on his team, I'd feel really good about that, even though it's not good news. It's like, okay, we've had bad stuff happen and we're going to start focusing on how to turn this thing around, versus I think the scariest thing are people that just never confront reality. And I think I've worked on a team or two where that's the case, and there's nothing more disheartening than the leader or the CEO who's just, we're going to look forward together, and they just use marketing or sort of management speak to kind of work their way around a problem. But yeah, I think going back to what I was saying before is I think mental health and mental like stability is the thing to kind of really monitor and watch out for and learn about, because it's like those are the people that end up creating the gumroads, that end up creating like you always hear about Pinterest taking forever, this long story of people just staying in the game, and things change, technology evolves, and all of a sudden you have a really interesting and successful business.
For sure. I definitely respect the hell out of him for making this all public. It's way easier to just go quiet and like quietly wind everything down. But I do think like him making this public makes his likelihood of success from the ashes way higher. Like, I'm rooting for him, and we are like somewhat competitive with him.
Yeah.
I think it shows a lot on his end.
I don't know. I'm competitive, but I'm not probably as competitive as you. I mean, you actually were a like competitive athlete, but like I've always been more of when I've done athletics, it's been individual sports, and it's been more so in the music world. So I'm like more of a co-op gamer than a competitive gamer. But like I really do think that rising tides in this industry, it's going to rise everybody up. So if they do really well, like it's going to have an effect on Avocado. And I think I'd like to think that about all the competitors in the space, that it's like we're all kind of fighting for the same thing. There's plenty of pie to go around, but that doesn't mean I want to be I don't want to be at the top of the chain. I definitely want to be there, but at this point it feels like a team, right? It's like team audio, and we're kind of working towards the same thing, even though we probably are fighting at on the ground level for creator by creator, like who's going to win each one of these creators. But I think the larger question that I think we need to think about and walk away from and probably have a follow-up conversation around is like, is the time for audio now? Is this the red herring? Is this the, canary in the coal mine, basically saying, hey, this is not an interesting space? Or is this just a normal business that raised money and went in a different direction that they should have?
Yeah, my inkling here is that our timing is off. And I kind of spent the Christmas break looking at it as dispassionately as possible and seeing where we could take, all the stuff we built, which I think is a lot of really valuable stuff, and all the credit to you. Like, I think what we built is really impressive. And there's other opportunities to use that may be more fruitful in the short term and the long term. So
Oh, for
just
sure.
thinking how to take advantage of that.
Yeah. The good news is we've got a base. We haven't really gone too deep on anything. And I think we've built like minimally. Like, we have some really robust features, but they haven't been like overdone. That, I think the urge we have to fight is like, if we just built, like you were just saying, you had a purchase on your audio course, which you're like, I don't think I got an email. It's like, I don't think we built emails for that. Like, I don't like, it's still to that point where it's like, we've always tested, like, I'd rather send you a manual email the first couple times and then implement that email to the on the creator side, which it's like not a great experience, but it's always in this mindset. We haven't seen that critical mass of transactions or proof. So I don't think we've gone too deep. But that being said, we've been focusing on acquiring customers and creators in the audio space. So we're definitely deep into that, and we'll see. Does it make sense to continue down the path, or does it make sense to look at other things? I do think I'm a passionate person around audio, but it's more so the underlying like creator economy that's been exploding and is going to continue exploding, I think.
Yeah, we are kind of straddling three interesting markets. I'd say audio, the creator economy, and education. And I wonder if audio has these COVID like tailwinds. Which one's going against you?
Headwinds.
Yeah.
Headwinds, yeah.
That are problematic, and I think are going to be problematic. I don't think, people have been at home for a year. I think they're going to be home for 2 years, and it's going to be hard to get people to go back and change their behavior to how it used to be. So I think that old world is dead temporarily. And then it's like the creator economy and the education space are more appealing at the moment, and
For sure.
maybe diving in deeper in one of those directions.
Yeah, I tend to agree. I mean, I think there are now problems, but like part of me is like, let's keep focusing on like creating good experiences on an individual, like customer by customer basis. And if you're delivering value to them, like even if it's not 100 customers, and like you have something that works and you can continue to deliver value, is kind of where I'm going with this. Is like, and I'm going back to like what Warren and Knowable can't do because they've raised money. They can't really work on a micro scale and use some customers, and it's really like time. They don't have time. Like you just don't. Once you start down that path, you've got hires. I mean, maybe it ends up that way. I mean, I've seen some late stage companies that run out of cash and they're just like, run along on fumes. It's like, I guess we're kind of starting the company in a sense on a smaller gas tank, and which I don't know, maybe this isn't the way to do it. Maybe this is not the most ideal way to do it. I mean, at the end of the day, again, it comes back down to time. Like, are you going to spend 10 years in the space waiting for the, the trade winds to change, so to speak? Or do you just move on and move quickly and keep adapting? So it's something for us to think about. And I think looking at it dispassionately is the right way to do it. I mean, I think we need to do that on a probably more regular basis, and not wait for a competitor to, slightly combust, or maybe lose a wing in the process.
Yeah, it's tough. So there's a certain amount of money and a certain amount of building that's needed to properly test a hypothesis. And
Right.
that is why you raise $4 million. And so they're basically testing something similar to what Quibi did. And Quibi decided they needed, I don't know, $4 billion to be a Netflix competitor, which is way too much money. And they did it very inefficiently. So, I guess credit to Warren for doing it for 100th of the amount of money, whatever that is. But I don't know. I don't know if he got a real test of it, or even if we did. Like, we kind of built piece by piece, and it's just, there was a lot of building required to be like a credible business in a box. I'm not sure anyone has ever tried to do that bootstrapped. It's just a lot to build. So maybe that was like maybe we should have raised more and got a better test, but that would have taken longer. And I'm not sure we wanted to go down that path as much.
Right. Right. As you said, it would be massively dilutive. Is that the right word? But it just, the economics are totally different. And I don't think, I'm happy we've gone the way we've gone, even if it means, moving slower to start. But I just don't think that we were in this space first enough to be like the first responder, right? The one who comes in and revolutionizes the space. I feel like in this particular case, being able to kind of draft a little bit has been valuable. And so it's like, we're in this peloton, there's not a ton of us, right? There's maybe 6 companies that are on our radar at most, Knowable being one of them. And probably in terms of the fundraising perspective, they were the front runner. They still, by many metrics, are still in the lead. However, looking around, there's other competitors, I think, that have been bootstrapped that are probably doing comparatively better, right? If you kind of for every dollar of investment that's been taken in, what's the return been? So I think we're still in an interesting position for it. And, I just think, like, my philosophy, and I think our collective philosophy around this specific business doesn't necessitate us to be the one that's first. And I think, not to say we're trying to copy anybody, but, take lessons learned from other companies and sort of make a hybrid from it.
Yeah, I think that's good. I think this is going to be an interesting podcast going forward, deciding where we go with it and kind of our very public thinking process. So it should be a fun listen. So thanks for having listening.
Yeah. Stay tuned.
Well, until next week. Bye-bye.
Yeah. Thanks, Colin.